2 years ago, a first-time home buyer walking into a bank in GTA was quoted a 5-year fixed rate of about 5.5%. Today, that same buyer gets 3.94, and on a typical $800,000 starter home, the difference is $646 a month, almost $39,000 over one mortgage term. 3 days ago, the Bank of Canada made a decision that tells us whether that window stays open, and almost nobody is reading it correctly. Let me show you what actually happened when rates fall, what it did to real buyers, and what 2026 has left in store. If you are a first time home buyer, you are probably doing what most of my clients did in 2024, waiting for rates to drop more, waiting for prices to drop more, waiting for someone to say, nah. Here's the problem. I'm going to show you the actual data from the last rate cycle, and it proves that the people who waited for the bottom in a rate mostly end up competing with everyone else who waited. As an appraiser, I saw it in the past. Same house, same street, appraised twice, 12 months apart, completely different market. By the end of this video, you will know exactly what the number says, and you will be able to make these decisions with math instead of headlines. So let's start with what just happened. On July 15, the Bank of Canada held its policy rate at 2.25%. That's the sixth consecutive hold. But the interesting part is buried in the monetary policy report. Inflation ticked up to 3.2% in May, mostly gas prices tied to the Middle East conflict, and that's above the bank's 1 to 3% target band. Meanwhile, the economy is actually growing again. The second quarter growth is estimated around 2.5%, and unemployment is sitting at 6.5%, right where it's remained since the end of 2024. Meaning, the bank has no reason to cut and no appetite to hike. Growth is okay, inflation is sticky but explainable. The next decision is September 2nd. So please don't build your home buying plan around a rate cut that may never come. Now, the history lesson. Because if you understand this next part, you understand everything. March 2022, the policy rate is at 0.25%, pandemic era free money. Then from March 2022 to July 23, we got the fastest hiking cycle in decades, 0.25 all the way to 5% in about 16 months. To kill inflation, they had hit 8%. June 5th, 2024, the first cut, then cut after cut after cut. 275 basis points of easing all the way down to 2.25 by the end of October 2025. And since then, 6 straight holds. This is a plateau. Now, here's what the ride did to real first-time buyer. Same buyer, same $800,000 townhouse, 10% down, insured mortgage. In 2023, at the peak, the best 5-year fix was about 5.5%. Monthly payment about $4,500, and the stress test qualified you at roughly 7.5%. Today, 3.94. Monthly payment about $3,900. Stress is around 6%. That's $646 a month back in your pocket. And because the stress test qualifies you at your contract rate plus 2%, the exact same income qualifies for meaningful more mortgage today than it did in 2023. And here's the kicker, the double win nobody talks about. Prices fell while rates fell. The average GT home was about 1.16 million in June 2024. Last month, 1,058,000, down almost 100 grand. Stack the lower price to top of the lower rate, and the average GTA buyer's monthly payment is roughly $1,100 a month, less than it would have been 2 years ago. And that's the shift. It already happened. Most buyers just haven't noticed. But before you think you have unlimited time, look at what June's numbers are screaming. Sales 6,770, up 9.4% year over year. New listings down 12.9%. Prices are still down about 4% from last year, but they ticked up month over month. Demand is rising, supply is shrinking. Toronto Real Estate Board itself said that this tightening continues into the second half of this 2026. And as an appraiser, I'll tell you what it looks like on the ground. The floor is forming. And when all the buyers who have been waiting for the bottom realize the bottom was last winter, they all show up at once. Inflation at 3.2 is about target with a variable. Okay, so what do you actually take? fixed or variable. Right now, the best 5-year variable sits around 3.45%, fixed around 3.94, half a point gap. Variable at 345 wins if the bank cuts again. But we just covered why that's not a sure thing. Inflation at 3.2 is above target. With the variable, you are betting on cuts the bank is not promising. Fixed at 394 locks in rate seen since before the entire hiking cycle. If inflation stays sticky and bond yields climb, you will look brilliant. Here's my honest framework for a first-time home buyers. If a $200 a month payment swing would stress your budget, take the fixed. 394 is a good rate historically. Take the variable only if you have room to absorb increases and you are comfortable betting against sticky inflation. And remember what the last cycle taught us about the wrong guesses. Variable rates holder in 2020 watched their payments jump 30 to 40% in 18 months. Peace of mind has a price. Right now, that price is about half a percent. So let's get practical. 5 things to actually. Number one, get pre-approved now. A pre-approval locks your rate for 90 to 120 days. If rates you're protected. If they fall, you take the lower one. It's a free option. Take it. Number two, use the 30-year amortization. Insure mortgages for the first-time buyer now allow 30-year amortization. On the $800,000 example, it drops the payment by roughly $300 a month. Yes, it costs more interest long term, but it gets you in the door. Number three, max out your FHSA. 8,000 a year, 40,000 lifetime. Tax deductible going in and tax-free income coming out. If you and your partner both open one, that's $80,000 of tax advantage down payment. Number four, know that insured cap is now 1.5 million. You don't need 20% down until $1.5 million. For a GTA buyers, that opens up most of the freehold market with a lot less cash. Number five, and this is the appraiser in me, get the value right before you offer. In tightening market, bidding war comes back. And the number one deal killer I see is the appraisal coming in under and winning bid. Know what the comparables actually supports before you offer, not after the bank tells. So here's the bottom line. The big rate move already happened. 5% down to 2.25. And it handed today's buyers roughly $1,100 a month compared to 2 years ago. The July 15th hold and inflation at 3.2 say don't wait for another big cut. This is the rate environment. Plan around it. June's data shows the market tightening underneath you. The waiting strategy worked in 2024. The data says it stops working in the second half of 2026. If you are wondering what this numbers means for your income and your budget, drop it in a comment. I answer every single one. I've also put together a free 2026 first-time buyer rate sheet. All the payments match from this video at every price point from 600,000 to 1.5 million. Link in the description. And if you're actively looking in the GTA and want someone who can tell you what a home is actually worth, not just what it's listed at, book a free 15-minute call. Links in below. I'm Mihir. I appraise these homes for a living. See you in the next one.